Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great weekend, safe weekend. Supermoon yesterday. Ow! And a great week. Market-wise, let's take a look at it out here. We have the Dow up 33. NASDAQ up 33. S&Ps are up 11.5. Gold contract down $1.50, trading at $1,309.50 an ounce. Silver up 13 cents at $20.70 an ounce. Platinum down 4 at $1,470 an ounce. Copper $3.17 a pound. Light sweet crude up 37 cents, trading at $98.02. Bonds, they refuse to back off. You get the 10-year down 2 ticks at 125.28. 30-year off 2 at 139.11. King dollar up 76 ticks at 81.53. The euro's down 26 at 133, and the yen's trading up 15 at 102.91. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Can you say ABC structure on the way down? And it's a big one, folks. It's a 75-point A to B equals C to D now check this out. This is really intense today. You had Europe, okay? You had the FTSE close up 1%. You had the DAX close up 1.9%. And guess what? Our markets couldn't handle higher price. What you have here, you're building cause for, number one, a large ABC structure on the way down. There's many equities that have already got croaked, and they're building a separate ABC structure on the way down. Specifically, if you look at United Technologies, that's going to be a monster ABC down. You look at Boeing, they've already finished one. That's another monster ABC structure on the way down. There's a lot of selling that's going on a continual basis underneath this market. Dow Industrials, right now you're up 35. Dow is up about 90 bucks earlier. Just can't handle a higher price. That is a large ABC structure on the way down. A little complex one. We had got over the B point, the C point rather. The C point that was established on the 4th. That was 16,596. You got to 16,627 today. Can't handle it. And the volume today, folks, is absolutely anemic, which you can expect on a Monday. If you were a bull, what you would love to see today is that you actually wanted to go down, not up. You're a bear, this is exactly the layup that you want to see. Why? You get to a higher price, you go over the last swing point, which in itself had no volume, can't handle it with lighter volume, you get a rejection of higher price. NASDAQ Composite, that's up 34 bucks. That's going to come in anemic also. We're at 4405. The 4395. That'll be the number that you'd like to see the composite close under. If you go to we go back to the SPY, the SPY for a second, what you're going to see inside the SPY is that the high of the 4th of August was 194.30. You've got to 194.66. That correlation, we've done 58 million shares. It's 91 million. This is, let me tell you something, folks. The 91 million shares themselves was anemic volume as to compare to how you went down on 189 million. The characteristic today is really sick. And all that does is put more force behind the C to D leg of this ABC structure on the way down. Small caps. Let's go to the small caps. Small caps had a heck of a run out here this morning. If we look at the IWM, this is what you have happening with the IWM. The IWM right now is at 113.51. Up $1.24. The IWM is coming into ICE. It's doing that with 23 million shares versus 62. IWM's not going anywhere either. Pretty amazing how this whole baby is shaking out. Gold market. Let's go take a look at gold. They just can't whack gold down. They're trying, but guess what? Just can't happen. Well, there's not enough sellers. There's more buyers than sellers. Right now, today you had a sideways move. 59,000 contracts out here, which is not a lot, but bottom line, you didn't go to the highs. This went topside last week. You had sign of strength on the 6th of August, as well as Friday on the 8th of August. That sets up, we're at 1309, that sets up the run to 1347. Inside, now this is what's really cool, inside the XAU and the HUI. So here, now let me go back to the gold contract for a second. So if I go back to the gold contract, when you're looking at this, you have two separate swing points. You have the swing point that was established on the 10th of July. That high is 1347.50. And right now the market's just saying, hey, I want to go test that. Your largest swing point, which I suspect we're going to go to, is the swing point from March 17th. That's 1391.90. Now, what's really cool, folks, is this, is that the way that the XAU and the HUI finished last week is that the XAU and the HUI had already got into the swing points from July. And they're right next to the March swing point. So what that sets up is this. That's saying that the equities are stronger than the physicals. When the equities are stronger than the physical catches up. The probability is much higher. So today you get the XAU up $1.36. We're at 102.62. The low of the swing point, which we're into right now, is 101.45. The high is 106. How we come into this is going to be really cool because it's going to give you an identification. Is this an ABC structure on the way up? And if it is, it's a monster. The 8 point on both the XAU and the HUI go back to May. In this case, if you ballpark it, it's 83, and if I do it conservatively, it's up to 101. It's a big number. So you go, what's that? That's 18 bucks. Your C point is down there at 97. What that would do is that would blow away the swing highs of March in the XAU and the HUI. If we go to the HUI and we take a look at it, what you have, you're up 218, you're at 244.66. At 244.66, the low of the 10th is 240, the high is 251. Same's applicable there, meaning ABC structure on the way up. Your A point is 201. Conservatively, your B is 242. So you get 41 bucks. Your C is out there at 231, which gives you 272, and that also would blow away the March highs. And in that context, that, I suspect, will bring the physicals up and up in an extraordinary way. Bonds. Bonds absolutely refuse to back off. 10-year. This is what we have with the 10-year. 716,000 contracts out here today. Friday, you went to a higher high, couldn't hold price. We went to 126.17. You had 1.8 million contracts. Your B point out here of an ABC structure on the way up is 126. This is my take. We have a large ABC structure on the way up. When you get to a higher high and have volume behind the move, and you can't handle price, you back down, you go right after it again. 30-year of USU. 30-year bond has already taken the B point out, taken it out with volume. We're at 139.11. That baby is making a run for 142. Big numbers. Dollar. King dollar. What is King dollar doing? King dollar is relentless. She won't stop either. King dollar is at 81.53 right now. That baby is building cause to get up into the 85 mark. Big number out there, no doubt about it. We take a look at some of the higher volume, some of the higher volume stocks in a low volume market. Kinder Morgan is the big number out here today. Basically putting together 4 of the companies under Kinder Morgan, and what an expansion of price. It is a monster, too. KMR is up $18.26. And if you do want to see, I was looking at this morning, if you want to see something, I put this on a 10-year, how when you are pushing with volume, bottom line, and this equity was pushing with volume flat out. Each and every time it was up at those highs. In fact, what you had in June, okay, when you start pushing a swing point, you can learn a lot about this one, folks. 2 different things ended up happening. If you put it on a monthly, it was pushing a swing point. The swing point it was pushing was 82 with volume. It was down at 68. Volume kept pushing. What did it do again? It kept pushing the month of September, pushing with volume. Never broke a swing point on the way down. And the deviance, no doubt, because it got down to a price point of 66 in March. But guess what? You had 66 with 10 million shares versus pushing up with 19 million. And your swing point, the actual swing point was 58. Never made it. And this thing went top side with force. It's Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see. Marbell is flat out here. You get ExxonMobil down 34 cents. Oxy is flat. You got Honeywell up 69. Big Blue's up 98. You got Procter & Gamble up 71. If we go over to the NBX 100, the 3Qs, we take a look at the 3Qs. This is also a failure. Meaning it's an ABC structure on the way down. What do you have with the 3Qs out here today? We're at 20 million shares. The high of the fourth, which is the C point of an ABC structure on the way down, was 95.69, and that we had done 33 million shares there, which in itself, bottom line, was light. What do we do today? You're going to do about 24 million at the most. You got over the high of that day, which is 95.69. We hit 95.76. Right now we're at 95.56. Bottom line, all it has to do is close under the 95.69, and that sets up a complex ABC structure on the way down. What a complex ABC structure is on the way down, folks, is this, is that you come off, and this is on the way up or the way down, either one. But when I just use the word complex, I want you to understand what it is. In this case, I'll talk about the ABC structures on the way down because they're all in all these indices. You come down with volume. You go up with lighter volume. Then what you do is this. You go past the B point. And as you go past the B point, you don't have enough volume to break the B point with volume. So if we look at the Qs, what the Qs did is this. Qs come off a high of 96.34. You got down to 94.04. Now, you come down there on the 1st, and you had 60 million shares traded. You get higher, and you did 33 million, so you went up with half. But then this would happen. You come back down, and as you are attacking that B point, on the first day it went after it, you had 50 million, which is pretty good, but you didn't hit it because you need over 60. When we did hit it, you only hit it with 34 million. That sets up basically a failure of the ABC structure on the way down, because in this particular case, it hit it with lighter volume, rejected the price. Then what do? We go sideways. Today, you go above the C point again. You fail. Now it's going to make the attack once again on that B point, and that's 94.04. That is in the Qs. If we go over to the SPY, and you want to see the correlation inside the SPY, same type of setup. SPY's in worse shape, though. The SPY basically is screaming a lot heavier that wants to fall apart quicker, which is really wild because the SPY is the one that has been able to handle higher price and stay at higher price for a longer period of time. But this is what we have with the SPY. SPY came off the high of 199.06. Come down with huge volume. We come down with 183 million. You come down with 189 million. Then how does it bounce? So watch. Then you bounce higher, and the bounce was on the 4th. You bounce higher with 91 million versus downtown with 189. Then you go after the B point. So as we went after the B point, we went after it 3 separate times, and each time it just didn't have the juice. First time was on the 6th of August. You had 94 million. And remember, we got to have more than 189. Next day, you had 135. You had expansion, no doubt. Okay, closed at its lows, but guess what? You still didn't get that 189. Now what does it do? It goes after you see, it goes over that today. We went to a price point of 194.66. If you have a close under 194.30, that's complex ABC structure. And once again, it will go after this B of 191.57. Now, so, and that action, folks, is right across all the indices. What's really wild out here today, as I said at the beginning of the show, was that with Europe holding highs, the DAX being up 1.2, which, you know, it's got killed, but the bottom line, there was still a huge bounce. In our market, not being able to hold price, it's a big deal. Let's go take a look at FENG for one of the tigers in the den. This is Phoenix New Media. It's a new media company, provides premium content, integrated platforms and TV channels in China. The low is 740. The high is 1358. This will be coming out with its numbers after the close out here. And right now, let's see what this company does. This company right now takes in about $400 million a quarter. And, okay, this is going to be interesting because she's got action. She's got a high volume high hanging out here at 1358. What's a good setup? You're up 50 cents right now. You're 1127. You're coming into the last swing point with 970 million versus 500 million. What that says is you're going to break the swing point and make the run to 1358. That's on the daily. Let me see what this weekly looks like. This is a good-looking chart. Oh, look at the yin and yang on this one. Oh, this is always a trip when this happens. Okay, so check this out. Okay, so weekly basis, we're at 2.1 million. Yeah, it's still good-looking. Okay, so watch this. On this one here, folks, I have a weekly up. If you happen to be watching Tiger TV, I have a weekly up. And this can get, let's see, I believe it's only been, okay, so I pull this back. So what you're going to see is this. You have an equity that in October of 2013, you went from $13 down to $8, and you went down there with some real volume, big volume. So then what we do is this. Now when I say big volume, it's 9.6 million. Then you go topside, you go sideways, then you go topside with 10 million. You come back into the lows that were established in November of 2013 rather, and you come back into those lows with 3.8 million versus 9.6. So that correlation there is dynamite, meaning you tested lows, did it with lighter volume. Now the correlation we're at is the swing point we're dealing with on the 27th. You got to remember something. Where swing points are, that's where the market talks, walks, and squawks. Now, this is subtle here, but watch what happens here. The highs, where the volume is 1358. This is on the weekly. The low of that point is 1046. Now, this is really cool when you watch this. Because we're already into 1046, and you have a high volume high, and you're going after the swing point from June 27th, your probability is much higher that you're going to go test that swing high. So that's how you line that up. You're inside the bar. You have a high volume bar. That's the week of March 7th. You're over the swing point, or you're right at it, 1138. A weekly is 2.1, and you're already done 977,000. That's saying that after the close out here, and we'll look at it, you should be running for that area. And depending on how you're into this equity would depend on how you want to trade that out. But it's a good looking stock right now to get at least. Actually, let me do this. I'm going to put this on a monthly too. We put this on a monthly just to see. Okay, so put this on a monthly. Yeah, on a monthly you get a high volume shooting star. High volume shooting stars love to get tested. Now, we want to beware. I think this is going to go up a couple points after the close. But what you want to be aware of, high volume shooting stars, folks, like to get tested. You get tested with lighter volume, take your money and run, because it will come all the way back down to the bottom. 877-927-6648. Dow's up 22, Nasdaq's up 31, S&P's up 9.5. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to a few of these financials. We'll start with J.P. Morgan Chase. J.P. Morgan Chase, that little baby's also setting up a little ABC structure on the way down. And this is a classic, too. JP had come off its high of $61. That high was established March 25th. Goes south, gets into $52, does a counter trend bounce right up to ICE. And, you know, when you take a look at some daily, folks, what it had done, 11 million shares versus 29 million. Gave it up again on price, 59 to 56. And this thing will come back and try to test its low of May 16th. That's on the daily. We take this and we put this on the weekly. What you're going to see inside the weekly is that this consolidation has been on for quite a while, going all the way back to May of last year. You know, we'll see if it wants to hold. J.P. Morgan Chase is strong at the 48 level. Right now you're at 56. So actually, even 52. 52 is pretty strong. What is interesting with J.P. Morgan Chase out here today, I suspect that they've already started negotiations with the city of New York because what they floated out here earlier today is this. J.P. Morgan Chase, the biggest U.S. bank, is considering moving its headquarters within New York in general, as the company has fewer employees in the nation's largest city, according to a person briefed on the discussions. So the potential plans, which include taking office space in Manhattan, at the World Trade Center or Hudson Yards, are in the early stages. No decision is imminent. Bottom line, when they do open this up, banks under pressure to boost returns have been seeking lower cost locations for employees who don't interact directly with clients. J.P. Morgan is examining its property holdings in New York, where it had held 11.4 million square feet, 1.1 million at the end of 2013, including 1.1 million at its 270 Park Ave address. Last year, now this is where this comes from, J.P. Morgan sold a 60-story skyscraper at One Chase to a Shanghai-based international firm. What you have out here, folks, is this, is that the back office aspect of these large banks, I expect, are going to continue to move. The front office, though, making the deals, the presence is still going to be in Manhattan flat out. But what you are going to see is that you're going to see, just like everything else, those are going to move to lower-cost states. And Jamie Dimon at one point was joking around saying, why aren't we in Miami? You know, and I can picture, you know, not necessarily Miami, but parts of Florida, yeah, you can put back offices in there and they can save an extraordinary amount of money. And I suspect that's what they're doing, because what J.P. Morgan had already done is that they basically had already started basically, you know, laying off some of their tech people. And, you know, that's, you start cutting expenses. What that is saying is that their top line is not growing as much as they wanted to at this particular point. And we do look at the technical setups in them. The bottom line is that you're at 56. We broke out of the 53.25 range, which is the highs of 07. And if you break back into those, it's not the end of the world for J.P. Morgan. I mean, J.P. Morgan got on 49. I don't see any real disasters here for J.P. Morgan. But what you do have is that once you're back inside that range, you know, you can go lower. And in order to basically cut expenses and bring that bottom line up, that's an easy way of doing it. And the fact of the matter is, you know, I'm being prejudiced now because we're in Florida and the quality of life is extraordinary. But when I look at it just as a business sense of base, it's like a no-brainer. You know, you send people. Anyway, you know, we'll see where that does shake out. But I expect you're going to see more of that back office staff, and in banks, back office staff are absolutely huge. I mean, there's no doubt about that. So 877-927-6648. We go over and let's take a look at this oil market. So oil, folks, has basically pulled back. This contract here, we're at 98.01. You came off 106.60. We pull this and we take a look at this, and it looks the next leg down. So this is another ABC structure on the way down. In fact, look at that. Ooh, this is a big one. 1 second. You have two separate ABC structures here. 106. It might have already finished one. 106 to 98. So it's $7, which gives you 97. 96. Yeah, you have two separate ones. Okay, so watch this. This is going to be powerful on the way down. You have an ABC structure that started off the high in June. So you take 106.60 is your A point, 98.60 is your B. I say 108, 106. So you get $8. Your C point is 103, so that gives you a 95. And 94.31 is your swing point, low swing point from the 17th of March. That's the first one. But guess what? We just set a second one up. The second one is 103.45, July high, 96. So you get 4, that's 7. I suspect today's going to be the C, which gives you 98, which is going to give you a 91. This is going to be interesting. We already broke the B point of the larger one, and we'll see how this shakes out And 91, 91 brings you down to the low of the beginning of this year. This is a nice little setup, meaning a structure, an ABC structure on the way down. It's going to be intriguing to see, okay, what is the driving force getting this lower? Is it that we have so much extra oil, or in fact, are people not using it because of the economy? In the futures market out here today, you have coffee is the mover out here. That's up 4%. Lean hogs, they're up 0.7. Silver's up 0.6. We have live cattle up 0.4. Gold is flat. Gasoline is trading at $2.75. There's no doubt the unleaded gasoline seems to have gone down pretty good. As we come into this close out here, what you're going to see, Dow can't handle higher price, selling off into the close. Inside the Dow Industrials, I see, it's ExxonMobil. Exxon's taking its out. ExxonMobil's a large ABC structure on the way down. American Express is down 49. Walmart is down 34. Pfizer is off 9. Putting points into the Dow Industrials. The big one out there today is Intel. That's up 44 cents. Caterpillar's a dead cat bounce. That's up $1.33. Cisco is up 23 cents. And Disney is up 70 cents. If we go over to Caterpillar, let's take a look at Caterpillar. Yeah, she's... so Caterpillar gapped away. High was 111. That 111 was established on the 16th of July, right down to 99. That was on the 1st of August. We hit those lows with 6 million shares. You're bouncing now with 3.3. The 3.3 is going against 8. This is a very large ABC structure also on the way down. Now, Caterpillar, I wouldn't pull the trigger in Caterpillar yet because I suspect you're at 104.62. Caterpillar can get it to that 106.23. The 106.23 is the high of the 24th. That's where it gapped down. And that identification right there, oh, look at that, and that's a high volume. That's one. This wants to test. It's 106.44, folks, that it wants to test. Let that test happen. Because you test that with lighter volume, you get action downtown. We go over and take a look at those future markets coming into the close, and what you have is this, is that the operators are in here selling, and they're selling early out here today. What do we got? Yeah, you get 15 minutes. This is early. This is going to be a little ABC structure on the way down. This market's going to basically give it up. At 1,400 hours, 1931, in the 10-minute chart, you had 26,000 contracts traded. We're going right after that right now. And it looks, let's see. Yeah, we're going to break it. You get 6 minutes left. It's expanded pretty, 16. Yeah, it's going to break it. Okay, so that level there, we're going to go after it right now. We're at 1932. That would do 1941. That's 10 points. That would close you out at 1925. This is going to be interesting watching this close come in. Because if you're at 1925, that would mean that the S&P was up all of 3 points coming into the close. When, in fact, pre-market out here, the S&Ps are up like $12. So this is going to be a wild close as we come into this Monday close. What you do have out here is that you got to a higher high. The volume was lighter, is going to be lighter. Right now we're at 421 on the NYSE. That's going to do all of about 525. They'll push 100 million into that. But that characteristic is light in an extraordinary way. You take a look at the NASDAQ composite. Where is she? MVOLNEQE. Yeah, that's going to, we're at 1.3. That'll do about 1.55. Stay right there, folks. Tom O'Brien, TFNN. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Backtech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Don't forget, folks, at TFNN, we start our programming, live content programming, that is, every morning at 8 o'clock, 8 a.m. to 6 p.m. You get all live content. You can get all of that right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just go on your browser, TFNN.com. On the right-hand side, you're going to see the Tiger TV. Hit that. You can get the audio as well as the video. Now, let's go back to these S&Ps, because the S&Ps broke the B point, broke it with volume. It's still hanging at that level, but I want to show you how an operator comes into an equity and how it breaks down. And this has been on a consistent basis. These numbers have been hitting on a consistent basis about the last 2 to 3 weeks. So, what do you have here? Your B point that we're talking about is the B point that was established this morning, this afternoon at 1400, 1931.25. We had done that with 26,000 contracts. Guess what? It came out with 30,000. Now, you're at 1932. You're going to see the sell right back into it again. This is about as deviant as you can get. What do we got? About 13 minutes into the close? Yeah, you only get 8 minutes into the close. There's going to be pressure into the close. Those identifications, folks, when you're seeing that come out, that's not a retail trader. Someone just didn't turn around and fire off another 15,000 contracts, meaning selling them, because that's what that is. You broke the swing. You did it with volume. That sets up 1925. Now, there's a couple different ways you can do this, meaning the larger picture is a 75-point ABC structure on the way down the S&Ps. The smaller picture, if you're day trading, is 1925. That's how you want to be setting these things up at all times, because what you're going to be able to see, you have your price projection number one, where that's going, that's 7 points down. You're at the 1932. You know, if you're a day trader, guess what? You can just put your stop right on the other side, give it absolutely zero, 1933.25. Oh, give it a point. Give it a point. That's how you want to be fast fingers in a market like this, because what we do have is that you have a trader's market here, flat out. That's what it is. The sell-offs have been extraordinary, meaning each and every single time, try to price the market up, market can't handle the price, the volume characteristic is correct, it's going against the swing point. In this particular case, it's been failing each and every time, and that is much larger sellers that are pushing into this market and pushing out as much as they can. What we do have, you know, when I was watching United Technologies and Boeing, United Technologies, I bring this back, this is going to be like, this is a huge sign, like, okay, just how far are you going to break down? Because UTX is back at this particular point of July of last year. That's the first part. The larger part, though, when we put this on a 10-year basis, what you're going to see is that you came off the high with volume. You know, we made highs. 120 was made with 68 million. Then you come off with 103. It's like, really? Come off with 103? So UTX is set up that it can go down to 83. 83, we're already at 105. It's come off 120. So if you're talking 83, you're talking about 30% down. That's a big number, man. But that in itself, you can make an argument also that that would be a normal correction in an equity that went so high. We're going to take a look at Boeing. The way Boeing's set up also a very large ABC structure on the way down. We put this back also on a 10-year monthly. And what you're going to see with Boeing is she comes into, so 184 million versus 152. Okay, Boeing's not as bad. Boeing is at 120. That can be had 109.49. Let me tell you something. If 109.49 doesn't hold, then Boeing's got monster problems. Where I'm going with the 101.49 is this. July of this year, that was pushing with volume, 152 million. It fell apart after that. And it has not had real large volume off the high. When you look at those characteristics, UTX versus Boeing, you can see the difference. The difference is quite dramatic. Now, let's go over to 3M, because 3M took a long time to break off its highs, but yet when it did break off its highs, you had some volume. Yeah, 3M, another ABC structure on the way down. This came off the high of 146. You're at 140. We put this on a monthly basis, and this has a long way to go down too. Your first downdraft is somewhere about 125. Right now you're at 140.66. So when you start putting these together, it's like, man, these equities have a long way to come into lower prices. And whether you're a bull or a bear, you know, the bull, you can, listen, even as a bear, you can make the argument that that's a natural retracement in a market that could go higher. But that natural retracement, because they've gone up so dramatically, is a long way down. And of course, what ends up happening is that when you start going very fast on the way down, because markets go down very fast, price destruction is very fast, what ends up happening is that the amount of leverage, meaning the margin leverage that's out there, that accelerates it on the way down, because all you need is a few different equities to get hit, to gap away, blows up the portfolio, has more selling that comes in and accelerates that phenomena on the way down. If we go over and we take a look at the S&Ps one more time before this close, they're holding up. Bottom line is that we're still at that 1933, and we'll see if they fire another one away. Yeah, you can see they're fighting like crazy right now. This last 10 minutes, so the 10 minutes prior to this, you had 30,000 contracts. This one right here, we are also at, right now, we're at 24,000. So the bout is on, and the bout is on about the swing point out here at 1931. Does it change the context of going to 1925 and ABC? Nope, it sure doesn't. What you need to change that is wide price spread, accelerated volume, and get into about a 1935 into this close, and I don't see that happening. What I expect you're going to see here as we come into this baby in the last, well, the futures are open until 420 rather. But what you'll see is a few more fight away, getting it down into that 1931 level. And that is what all distribution's all about. Hold them, hold them, hold them, bang, hit them again. Hold them, hold them, hold them, hit them again. And that's how this market is set up. And the amount of ABC structures on the way down are pretty incredible. If you go over to the XLE is a monster ABC structure on the way down. Hasn't been able to hold it again out here today. You know, complex one also. Got over the high of the 4th. And we did that, the 4th, you had, 4th of August, you had 12 million shares. We're going to do all of 9 million today. Couldn't handle price. Can you spell ABC structures, folks? ABC structures on the way down. You stay right there. This is Tom O'Brien. This is TFN. We're going to be coming right back. We had a bunch of earnings that are coming out. Dow right now is up 14. Nasdaq's up 30. S&Ps are up 9. Gold flat at 13.10. Silver 20.04. Oil 97.97. Stay right there. Come right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great week, folks. Let's take a look at one of our Believe cards. This is by Andro Guide. This one's a trip. Be faithful to that which exists nowhere but in yourself. Think about that one. Market-wise, let's take a look at it out here. We had the Dow up 16, Nasdaq up 30, S&P's up 8.5. Gold contract down 90 cents, traded at $1,310 an ounce. Silver up 9 cents at $20.03 an ounce. Platinum down 2 at $1,472 a pound an ounce. Light sweet crude up 28 cents, trading at $97.93 a barrel. Now, oil, folks, the ABC structure on the way down. Bonds, they refuse to back off. You get the 10-year sideways move out here today, down 2 ticks, 125.28. 10-year went to a higher on Friday, gave it up in price, pulled back in price, still got over the B point with volume. 128 is where the 10-year wants to go. 30-year, same setup. The 30-year had already taken the B point out with monster volume. We're at 139 for 11. 30-year wants to go to 142. King dollar Up 56 ticks out here today, 81.51. She wants to run to the 81.50 area. Euro down 25 at 133, and the end's trading at 102.18. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay. We have a 75-point ABC structure on the way down. It turned into a complex ABC structure, and what a complex ABC means is this, is that first off, a definition of an ABC, down or up, goes like this. Down, you come down with volume, you go up with lighter volume, you come back down into the B point, you break it with volume. What that sets up is your probability is very high that you get A to B equals C to D. If A to B is 10 points, C to D is going to be 10. The A to B and the C to D are straight line moves. The B to C is normally a consolidation. It can drive you a little bit crazy depending on how long they are. This one here, this is what you have. Your B point is 1916.37 on your cash S&P. It's not the lowest low, and I'll show you why. Well, this is the conservative way of doing it. So you come off the high and your cash S&P of 1991. You get down to 1916. So there's your correlation. There's your 75 bucks. You bounce, and when we bounced on the 4th of August, so we'll look at the correlation on the 4th of August. 4th of August, what you had, you went up with 675 million shares versus downtown with 900 million and 791. Then what do? We go after the B point, and it doesn't have enough juice to break it. It breaks it on price, but it doesn't break it on volume. And in fact, the S&P went after it a few separate times. It went after it on August 5th, rejected lower price. August 6th, it had lower price and stayed there, but lighter volume. And August 7th, it had lower price and rejected it and had lighter volume also. So now what do we do today? Today, you go over the high of August 4th. And the cash S&P, that was 1942, we get to 1944.90. Then we give it up. You give it up on price. You give it up on volume. You close underneath it. That's a complex ABC structure on the way down. So now what's the market going to do? The market's going to go after the B point again, folks. That B point being 1916.37. And all the indices have this. I'm going to go through the SPY for you just quickly so you can see how the SPY sets up. Whatever you're into, take a look at it, and you'll see the setups are basically identical because they're all over the market. SPY, that come off the high of 199.06. You get down with volume into 191.57. Your volume, you did 189 million. You bounced on 91 million. Now, check this out. This is how weak the market is. The bounce of the initial A to B and B to C had 91 million on the bounce. Today it did 72 million and couldn't hold it. This is going to go after the B point again, and the characteristic, you're going to be looking for more than 189 million shares in order to basically have a confirmed ABC structure on the way down. The NASDAQ composite, what do we do with the composite? Composite, same type of setup. Composite right now is at 44.01. Composite didn't have the juice also. Now, the composite closed over 43.95. That's the number it has to get back underneath in order to go after that B point once again. The NDX 100, the 3 Qs, however, did it. The 3 Qs has, the strength in the 3 Qs. The C point was 95.69. Your volume was 33 million. You got to 95.76. Couldn't hold price. Pulls back. The 3s are also an ABC structure on the way down. Small caps, the IWM, same setup. What the IWM did was intriguing. Now, this is the weakest indice. Got to 114.22, closed at 113.34, did 30 million shares versus 62. The ABC structures are pretty incredible. They were all over the place. Gold contract, gold's building cause for higher price. They can't bang it down. Went sideways today, 60,000 contracts worth 1310. What's game here is the 1347, which is the swing point from July. The XAU and the HUI are really acting good because what's happening in the XAU and the HUI, it looks like they're going to go after a B point We'll see whether they have the volume. If the XAU and HUI have the volume, guess what? It's not even going to be, it will take out the March swing highs. And what the equities have done, meaning the metal equities, they have proved to be stronger than the physical metal, gold, and or silver. And when that happens, most of the time what you end up happening is that the physical metal itself catches up with the equities. Bonds, as I said a little bit earlier, bottom line with bonds is that they got to higher highs on Friday, have the juice behind the move. They want to go to higher price, that's lower yields. The yield on the 10-year right now is 100.22. King Dollar wants higher price. King Dollar is trading out here at the 81.50 area. I suspect what we're going to see out here is that you're going to see the King Dollar make a run up into the 85.50 area, and that is one large number, folks. We take a look at some of the high-volume stocks out here in a low-volume market. You had BAC was flat. Kinder Morgan was the big number out here. That was up $18.40. They're going to basically put their 4 companies under one umbrella. They're going to go from a master limited partnership into a corporation, and the owner, well, the largest shareholder, which is, I think his name is Richard Kinder, actually. That was a cool, it's Richard Kinder. That's a cool $1 billion that he put market cap into the amount of shares that he does own inside this company. You know what's amazing is that, he has 16.5 million shares. And March, what is interesting? Let me just see something here. Brave Warrior. Whoever Brave Warrior is, they're going to be very happy right now, because Brave Warrior actually at the last filing bought 1.4 million shares and almost doubled up the position. Let me see who the sad one was. Oh, this is interesting. Listen to this. Oh, Goldman Sachs must be flipped out. Either that or they were doing the deal and they had to sell. No, it wouldn't make they had to sell. But Goldman Sachs had actually sold 1 million shares on the 30th. Their last filing was on the 30th. Wellington sold. Wellington must be flipped out in Boston right now. They sold all their shares. They sold 451,000. First, Invesco sold almost all their shares. It's interesting. 877-927-6648. Some of the Dow stocks out here. And the Dow couldn't hold it coming into the close, folks. What we had out here inside the Dow Industrials, not that it was up big. It was up almost $100. The high today was 16,627. Yeah, she was up $80. ExxonMobil and American Express was taking itself. Intel was trying to make up for it, but just couldn't handle it. You stay right there, folks. We got Tigers from IBD coming up next. Amy Smith. We had the Dow finish up 16, Nasdaq up 30, S&P's up 8.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finished up 16, Nasdaq up 30, S&P's up 8.5. And as we do each and every Monday at 20 past the second hour, we have our Tigress Amy Smith from Investor Business Daily. And folks, if you haven't test drove the print edition, Investor Business Daily, or the digital edition at investors.com. Right now, you can come over to our website at TFNN. You'll see the banner on the right-hand side. Hit that banner. Bring it over. You can test drive 2 weeks. You can take your choice. Amy Smith, what's going on?
Hey, sorry. I got a little tickle in my throat.
Oh, yeah?
Pardon me. I just, all of a sudden, I just got so excited I was going to talk to you, Tom. That was it.
Oh, you're too much. You either having almonds or you drank some coffee. When I do that before I get on, it's like, oh, if I'm starving, I have almonds. And then it's like, oh, man, I can't eat almonds before I get on. I lose my voice.
Well, it was something. I'm not sure what I did. Excuse me. Sorry for that.
No. Hey, listen, I heard you were down in Charlotte over the weekend, right?
I was down in Charlotte, North Carolina. You know what? It's so beautiful and lush and green. The southern people were so friendly. It was a really nice change of pace. Just beautiful.
Isn't that a beautiful town?
Oh, it's just gorgeous. It's very new. It's very clean.
Yeah.
We met in this really old church, which has obviously been remodeled, but I don't know how to describe this gray old stone. Oh, it's just beautiful.
Yeah,
and
no,
flowers.
If you've never been to Charlotte, folks, Charlotte is one of the most beautiful cities we have in the country. And it sounded like, when you just started, it sounded like you got a little southern accent there. I like that.
You know, it's funny. I'm from West Virginia, so when I go someplace and they're southern, I don't know, it comes back.
That's a great accent. I love that accent. You kidding me?
You know, it's so funny. I worked hard to get rid of it.
Oh man, let me tell you. I think I told you before when I was stationed in Virginia, and it was so cool because I would come home with a Southern accent, a Boston Southern accent.
That's very funny. I wish I could hear that because I'm trying to picture your Boston accent with a little twang in it.
I'm telling you, it was funny. It was really funny. So, what are we looking at?
Well, we had some solid gains last week, but we didn't have any volume. And today we had an upside day. We didn't have very much volume either. It was kind of nice to see the NASDAQ come back up above the 50-day. The S&P is still living below it.
Okay.
We're still kind of news-driven. I don't know if we're in the August doldrums. It's usually a lackluster month for the market. We could turn around. Typically, September, towards the end of the year, we'd like to get that Santa Claus rally. So, people should still stay plugged in, even though it's kind of boring right now.
What's interesting is that, this is really cool, folks, because in our office today, we have a real estate company too, okay? And so what happens is that what happened over the weekend, folks, is extraordinary. So we have a lot of short-term rentals also. Well, the phone went off the hook, folks. So people, just as you start talking about Christmas rally, what people are thinking already is that they're thinking next January, February, and March in Florida. Isn't that crazy? Kathleen convinced me, says, I can't believe what happened. I cracked up because I was listening to the messages. I was taking messages over the weekend. I just cracked up. I says, oh, my God, people are back. People are already thinking the winter, and they want to get out. So it is interesting.
That's amazing. So you're saying that you get really busy. In other words, people are looking towards the winter, and they want to come down to Florida.
Oh, they get a book out. We're almost sold out now. Yeah, they get a book out before September. Yeah, January, February, and March, it's pretty intense down here. Do you know what I mean? Yeah.
So everything's full. There's not very much because everyone wants to come down there and enjoy the nice weather.
Right.
Yeah, gotcha.
So, I want to switch gears with it because I know we get a lot to talk about, but what I'd love to talk about first, right, is that you have a webinar right now that is on your website, right?
You know what? And it's done by one of the nicest gentlemen you'd ever meet in your life. His name is Lee Tanner.
Okay.
And he just, he does not get paid to do this. It's a total volunteer.
Yeah.
And he did a webinar for us that we were able to post up on our IBD TV site. And he's one of the masters in the market, at least as far as Can Slim is concerned. IBD.
Sure, right.
He invests full-time. He's done this, I don't know, for about 20 years.
Okay.
He goes out of his way. He helps people all the time. One guy up in the Bay Area lost a lot of money.
Yeah.
And he was going to quit. And Lee said, nope, you're not going to quit. And he took this guy and he mentored him and he turned him all the way around. Now the guy's doing extremely well. So I just think that Lee's just one of these gentlemen. It's a great webinar. It's free. If anybody has any interest in investing, learn from one of the masters in the market.
What you do, you go to IBD, all right, go to investors.com, and then you're going to go to the IBD TV
tab.
Okay, and it's right there, right?
It's right there. It'll be under monthly meetup webinar stuff. So but he really is. He's just such a nice fellow, and we feel lucky that he's been with us. So.
That's awesome. Listen, it's nothing like the IBD family, no doubt about it.
Yeah.
So now let's go back to the IBD screens, all right?
Well, we have today. Take a look at this thing, Tom. This Bit Auto Holdings. It's a Chinese company, and I just did a bunch of research on it. They have kind of like reviews like Yelp.
Okay.
If you buy a car, you like it, you can post on there.
Up 10% today. Yeah.
They reported outstanding stellar earnings. Now, China's automotive industry, of course, you remember what we went through. We went through the boom.
Sure.
Well, they got the middle class now.
Right.
It's growing, and people are buying cars. No more bicycles.
Right. No,
right?
That makes sense. Right.
And they're so this website is going crazy. In fact, they have an English version of it. If anybody, everyone should do their own due diligence.
Sure.
If you go to bitauto.com.
Okay.
And just read about it. It's phenomenal. It's just, it's been number one on the IBD 50 list for, I don't know, just week after week after week.
Well, look at this. I'm looking at the gross numbers coming in. The gross numbers, folks, in 2010, they took in $69 million. In 2013, they took in $1.4 billion.
Unbelievable.
Oh, man. That is really cool.
And we do have some good fund ownership in it. Sometimes that people are a little not so sure they want to invest in a Chinese company, but this one's been vetted by some good, there's some decent mutual funds and decent hedge funds in here. There's great big volume in it, so it's not thinly traded. Some of the other Chinese stocks are more thinly traded. But this thing has traded tight, really nice and tight. It's up 52% the last 39 days.
Yeah, pretty amazing. Now, this, V Bishop? No, what is it? Yeah, VIP Shop?
Oh, VIP Shop is another one.
VIP Shop.
Yes.
Yeah.
VIP Shop. You know, I'm trying to find information on it because they were due to report right after the close, and I've been going through all of my screens. They may not have reported yet,
no,
but that's one that you want to keep your eye on.
Yeah, not yet. They're not out there yet.
Not out yet, but they're expected to have really stellar earnings. They're seeing sales pretty good. This one, you know what? If you go to their website, they have like the branded names for discounts. So if you want to buy, Calvin Klein, Chanel, whatever you want, they sell everything on this website for a discount. So it's all the American goods, all that are really popular with the Chinese folks.
Sure.
And, that's really popular.
Yeah. Now, Priceline.
Priceline, surprises us today. They reported well. They were up a little bit, not as much as some of the other stocks, but they've got a partnership with Chinese travel site Ctrip.
Yeah, I know, right.
And that's huge now. They put $500 million into Ctrip. They have 10% a stake in the company. And Priceline actually kind of broke out of a little price formation today.
It did.
It did.
With some juice, too.
Had some volume in there. It did.
No doubt. Last swing point up here, folks, was 1307. You had 1.3 and did 2 million today, and that's saying that the top is game again. Pretty amazing. 1341 or 1309. Have to love it. Amy, folks, come over to our website at TFNN. You can see the investors.com banner on the right-hand side. Hit that banner. Don't forget, there's a great webinar that's right at investors.com right now. Go under Investors TV. Amy, have a great one, safe one. Look forward to speaking next week.
Okay, Tom, take care.
Okay, bye-bye. Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 16, Nasdaq up 30, S&P's up 8.5. And as we do each and every Monday at 40 past the hour, we have our man Chad Coco from Think or Swim TD Ameritrade. Now, folks, if you're trading options, bottom line, Chad is the best option program in the planet, on the planet. It's right here every Tuesday, 12 to 1 Eastern Standard Time. And the way you get the program is this. You can get it anywhere in the world right on your cell phone. TFNN.mobi. If you'd like to see his charts simultaneously, see the Thinkorswim platform, just go to TFNN.com. In your browser, you'll see Tiger TV on the right-hand side. Hit that. You'll get the audio as well as the video. And don't forget, every trading day we do live content from 8 a.m. to 6 p.m. Now, as you're over at TFNN, you're going to see the Thinkorswim TD Ameritrade banner at the top on the side. Hit that banner. If you don't use that platform yet, it's an outstanding platform. I use it each and every trading day, whether I'm trading options, equities, commodities, or currencies. It's in one platform. It's a dynamic platform. You can hit that banner, bring up the account, and they will put paper money inside your account so you can understand how dynamic it is, number one, and how extensive it is. It's a retail platform, but it's realistically a professional platform that gives you the shot to be the bid, be the offer, set up the strategies, as Chad does each and every Tuesday from 12 to 1. Chad Coco, what's going on?
Well, how's it going? Thanks for that intro.
Absolutely, man.
So, yeah, tomorrow we're going to be actually going over a lot of stuff you just mentioned. So I'm going to be setting up a portfolio, showing how to manage that portfolio, setting up some beta weightings to determine where your risk is and maybe hopefully get you a little bit better set in case the market does take a turn, or even if it keeps on going up, if you have some short positions, how to manage those. Yeah,
and that's, the strategies that you folks do at TD Ameritrade Thinkorswim. I mean, over the course of years, of course, if you have the platform right now, folks, you know that whether it's every 3 or 4 days, it gets upgraded. It's pretty amazing how many upgrades you do. It's dynamite. I mean, it's just great. There's no doubt about that, man. But it's amazing over the course of years because, as Chad was just saying, folks, if you take a little bit of time, you need an edge on everything you do, anything that's competitive. And that is the edge, okay? It's not going to tell you whether to go long or short, but the reality is if you start understanding these strategies, it is absolutely going to give you an edge because mathematically it's going to tell you if you want to go long or short, what would be the best strategy, meaning your risk versus your reward.
Exactly, yeah. So we like to be able to set up our trades where we get at least a 60% probability of success on our trades. Try to keep our trades small just in case something does go against you. It's not going to kill your portfolio. Sure. We have the tools for you to use that. Our software is designed by traders, built by traders such as myself. So if there's something that I want to see in the software, we have it.
And what's really cool right now, is that we finally have a trader's market, Chad. Do you know what I mean? Whether you're a bull or a bear, we have movement going on, right?
We definitely do, yeah. So anything that you can pick a direction on, or even if there's no direction, we can place a trade around that and hopefully get some success. If the market keeps on going up and I have a bullish position, I can capitalize on that. Or if it's going to stay stagnant, I can put trades on that will capitalize on that as well. Definitely enough volatility in the market and enough volume in the options world as well to be able to make these trades work for us.
It's amazing the volume that has come in the option market. There's no doubt about it. What's really cool is that many times, you can put on a trade, and depending on, the option, folks, meaning how far you go out, you could be wrong on the actual trade.
And still make money.
And still make money. Can you talk a little bit about, not about that aspect so much, but let's say that someone's out like 3 months, and whether, it's a bull spread, bear spread, whatever that is. And what they also teach, folks, okay, is that how you can, it's not necessarily correcting a mistake, but the bottom line is that you can minimize the amount of bread that you may lose. You don't just have to burn the trade at that particular point.
Right, yeah. So if something starts to go against you, you always have the ability. So with options, even though they have an expiration, you don't have to wait till that expiration to get out of that position. You can roll it over to another expiration. So either roll it out further out, or if it's something that you were long and you pick. So say it's something like Korea is trading around $50.
Yes.
You think it's going to go up to 55, and you put a 55 call on that.
Yes.
And you start to see it to move down against you. You can roll that down to a lower strike and hopefully take advantage of a lower strike on that position as well. Sometimes you can even do that for a credit if there's a decrease in the volatility from your increase.
Which is huge. Because what has happened right now, folks, is that volatility, is back in the marketplace. If we take a look at the aspect of just the last week, what is so cool. And this is where different strategies come into play. And this is, if you're listening to Chad every Tuesday, you'll see how these strategies work. Because the reality in all of let's say in 2 weeks, we've gone from a 12 up to a 17, back to a 14, okay?
Right,
so,
bouncing all over the place, which is great for us as options.
It is, because you can be a bull or a bear and make money. That's
right.
That's the reality. Well, listen, we look forward to the show tomorrow. You have a great night, safe night, and we look forward to the show, Chad. Thanks so much, man.
Hey, take care.
Okay, have a great one. Have a safe one. So right here, folks, noon to 1 Eastern Standard Time tomorrow, right on your cell phone, TFNN.mobi. Tiger TV, just go to TFNN.com. On the right-hand side, you're going to see Tiger TV right there. Just hit it. Now, what's so extraordinary about today, folks, is this. And it's not, the market couldn't hold price. It had lighter volume. But what's extraordinary is that when you look at what Europe did, Europe held price, folks. And our market didn't hold price, coming right at the open, and Europe was still open. That is a signal that we are going much lower. You had the FTSE was up 1%. The DAX was up 1.9%. Now, if we go over and we take a look at the DAX, my take would be that it was a dead cat bounce, because the DAX hasn't been able to breathe since its high was established at 10,000, which was on the 3rd of July. It's been straight down since then, so it was about time that it had a bounce. But when you do have a bounce that is large, which it was in Europe, and our markets can't hold, that is basically screaming much lower prices are coming at us. Now, what the DAX had done, the DAX had broken its February lows, it has broken its March lows. This is what it's doing right now. I won't get the volume until tonight, but it looks to me like I suspect what we're going to have is a much larger ABC structure on the way down. That's the DAX in Germany. The FTSE, that went up 65 bucks as it went into its March lows. And that little baby, if in fact that's going to be up on lighter volume, do I have this one? No, I don't have it yet. So I'll get this in a couple hours. 8 p.m. Eastern Standard Time is normally when I get this one. Bottom line, if that's on lighter volume too, that's going to be big trouble because you break the March lows in the DAX, which you already did, and you break it in the FTSE, and if we get volume behind that move, that means that it's a much larger move that is coming lower in both of those indices. You get that, and of course, that's going to bring the probability higher that our markets want to go lower. Inside the context of our own S&P, the S&P is at, I mean, realistically, you can make the case that it's really not off of highs. I mean, it is, but, big deal. You're down 70 bucks after, going up a couple hundred. That would be a case, bull could make in a second. The bear can make the case that the amount of downdraft that would be created here is dramatic. You're talking, we'll see how this shakes out, but a 75.8 A to B structure on the way down is one big number. When you start looking at the actual SPY, this thing sets up for much lower prices. So the IWM, I suspect, folks, the Russell 2000, if we go over and take a look at the Russell will be the first one to break. The Russell came down hard. It took out its February swing lows, it took them out in April, and then it also took them out in May. Now, the other indices didn't do that. The other indices basically held and never tested, and if this is the bounce on the Russell, which I suspect it is, your A point on the Russell would be 1213, and your B is 1107. So that gives you 106 A to B. Your C is 148, which would end up giving you, 130. And that would basically get you down to the lows that were established in May of this year. And we'll see whether we break those lows. We've been down into those lows and consolidating those babies. The first time we were down there was July with 1.4 billion. You come down there again in May with 1.4 billion. Then you made a high with 1 billion. You can see the correlation. The correlation is pretty intense. We came down 2 months ago with 1.3 billion, 3.69 to be exact. So that's saying that, number one, you're going to get down there and test it, and we'll see what the volume characteristic is when we're down there, if in fact it wants to break it. Now, right now, the Dow finished up 16, Nasdaq up 30, S&P's up 9. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. And folks, if you'd like to test drive my newsletters, you can come over to our website at TFNN. If you'd like to test drive the Gold Report, just go to newsletters, go to investment newsletter, test drive the Gold Report 30 days absolutely free. If you'd like to test drive Market Insights, go to newsletters, trading newsletters. You can test drive Market Insights 2 weeks absolutely free. Now, after the close out here, let's go take a look. You get Nuance, N-U-A-N, Nuance Communications. Nuance closed at a price point of $18.10. She is trading right now down. She's at $16.52. Now, check this out. This is going to get interesting here. This is why. Nuance has had two nice signs of strength. You came off $14 on the daily, $14.86. That was in March. You go from 14 to 17. You pull back with lighter volume. Another sign of strength came in June 16th. You go from $16. You go all the way up to 19. Okay, so now what we're going to be doing, you're going to be backing down into the sign of strength that was established on the 16th of June. Now, you don't just go out there and buy it because it's down a couple bucks. You want to wait for the volume to see how it hits that sign of strength, because I want to show you something. So that's on the daily. Now, if we take this and we put this on a weekly, I'll put this on a 2-year weekly. When you're looking at the weekly, it's like, it gets kind of interesting. Actually, let me put it on a 3-year weekly. Okay, so when you put it on a 3-year weekly, it's like, okay, what have we done? You've come off a high of $29. You get into a low of $13. And that looks like it's a high volume low. So what do we got to do? You got to say, okay, talk to me. Is it a high volume low? Because if a high volume low, it's going to get tested. So you want to put it on a monthly. On a monthly, what you have is this, is that the low is a high volume low at $13. This is the month of November of 2013. So watch what it did. You go, you're at $13. It came down there with 178 million shares. Then you go topside and you get into $19.61 with 84 million. The 84 million is going into 134 million. So you can see what's stopping it in its tracks in a huge way. But what's also hanging out here, now this is where this gets wild, is a high volume high. You get a high volume high at $31.15. Now, what I've seen over the course of years, you never know when it's going to go back to the high volume high. But they get tested. Markets don't end, meaning total breakdown to high volume high. So you always want to be aware of, like, okay, we get a high volume high. All you have to wait for then is you wait for the lows to get tested with a rejection of lower price, with lighter volume, and then you have game on. Okay, so in that context, we go back to nuance. When you take a look at the high volume lows at 13, this is going to open at 16, right? So let's see what they're saying first. So they miss their revenue numbers. Okay, so Nuance Communication, the estimate was 27 cents. They made 27 cents. That earnings per share estimate is always something, you know, you can basically massage, right? They missed it. It's the top line, folks, okay, that you really want to stay focused on if, in fact, they made it. Why? Because their revenue is going down. The estimate was $498 million. They came in at $475. So what do you wait for? Okay, so as we pull this back, what you're going to wait for is you're going to wait for, number one, how does it hit the sign of strength at 1689? I expect it's going to probably hit it pretty good. Then the key is that, okay, does it go all the way down to 1489, which was the last sign of strength? Or, in fact, if it gets into, yeah, see, this is really cool. This is going to test. This is what's cool. This is going to test, folks. This might take a couple months. This wants to test the low out there of 13. And just put it on your list for equities to watch. Put an alarm on, and I put that alarm on somewhere around 1350. Because if you test it with lighter volume, it's going to set up a beautiful consolidation. And the top of that consolidation, you know, if you're getting into 13, the top of that consolidation is 1950. So it's a decent setup for an equity that got destroyed, comes off the bottom, comes back and tests, and see, it didn't have enough volume. Even though it did exactly what it should have done when something comes off the bottom that has got destroyed this dramatically. You know, so what is going to get interesting here is that is this, I believe, and I can ask my tech expert at TFNN, man Dave White, if this is an Apple supplier. So they provide speech and imaging solutions for business and consumers around the world. The company's products include speech recognition, call steering, a product that converts text into speech. Bottom line, though, what you want to wait for is you want to wait for a test of those lows. If you get them on lighter volume, has a rejection of price, then you get a nice little setup that's happening. What you also have here, that correlation inside the correlation that this market is doing a very large ABC structure on the way down. As that is happening, you basically should start getting a list together of equities that you think have strength and that have high volume highs. What you want to be looking for, folks, is that any of these equities that have reached higher highs, have volume in them, as they're pulled back, they go back to the bottom of their swing points, reject lower price. Those are the ones that you want to be looking for if you like to be long the market. Inside the market itself, one of the largest ones out there that I suspect is still screaming trouble inside the Dow Industrials is United Technologies. United Technologies has already done one ABC structure on the way down. The way this is structured right now, it looks like it's going to do a much larger ABC structure on the way down. It came off the highs of 120, got down to 105, couldn't handle that price. Your next level looks to me like it wants to bring it down like to 83 or something. That's outrageous. Bottom line, though, that's what it wants to do. When we get that, that's going to be an absolute failure right across. Can't break them up. You're going to break them down. 3M, same situation with 3M. 3M took a while to break down. Boeing's not as bad, but Boeing does want to come back. Big Blue, let's go look at Big Blue. Big Blue hadn't been able to hold price. She's still in that consolidation. She's at 187, and so that she's going to go test the 172 again. How we test that 172, that looks to me like she's continuing to build cause for lower price. Both of the highs, absolutely no volume. All the lows, monster volume. Always remember, folks, whatever you think about, you bring about. Whatever you're focused on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to right here tomorrow. Go get them, folks.